repayment strategies are structured plans designed to systematically eliminate debts. Effective debt repayment strategies are crucial for achieving financial freedom. These strategies provide a roadmap for individuals to manage and reduce their financial obligations. The primary goal of debt repayment strategies is to systematically eliminate outstanding debts. The debt snowball method prioritizes paying off debts from smallest to largest balance, irrespective of interest rates. This method focuses on psychological wins by eliminating smaller debts quickly. Minimum payments are maintained on all debts except the smallest, which receives any extra funds. After the smallest debt is paid, the funds are then directed towards the next smallest debt. This process continues, creating a snowball effect as more debts are eliminated. The debt snowball method can provide motivation and a sense of accomplishment during debt repayment. The debt snowball method involves paying off debts in order of smallest to largest, regardless of interest rate. Once the smallest debt is paid off, the money previously allocated to it is then snowballed into the next smallest debt. This process continues iteratively, with each paid-off debt's payment added to the next accelerating debt reduction. The debt snowball method continues until all debts are cleared, providing psychological momentum and motivation. The debt snowball method provides psychological benefits through quick wins. Rapid debt reduction increases motivation and fosters a sense of accomplishment. Seeing debts disappear quickly reinforces positive financial behaviors. The psychological boost from early success can lead to long-term financial stability. The debt avalanche method prioritizes debts with the highest interest rates first. The debt avalanche method focuses on minimizing the total interest paid over the life of the debt. Debt size is not a factor in the debt avalanche method. Interest rate is the determining factor. By targeting high-interest debts, the debt avalanche method can lead to faster debt reduction. The debt avalanche method requires discipline and focus on long-term financial goals. The ultimate goal of the debt avalanche method is to achieve financial freedom by systematically eliminating high-interest debt. The debt avalanche method involves making minimum payments on all debts. Extra funds are allocated to the debt with the highest interest rate. Once the highest interest debt is paid off, the extra funds are redirected. This process is repeated until all debts are paid off. The debt avalanche method prioritizes saving money on interest payments. By targeting high-interest debts first, the total cost of debt repayment is minimized. The debt avalanche method prioritizes paying off debts with the highest interest rates first. By targeting high-interest debts, the debt avalanche minimizes the total interest paid over the repayment period. This strategic approach results in a mathematically more efficient debt repayment strategy. The reduced interest accumulation leads to faster debt elimination and greater long-term financial savings. The debt avalanche method's mathematical efficiency provides a clear advantage in minimizing overall debt costs. The debt snowball and debt avalanche methods offer distinct approaches to debt repayment. The debt snowball method prioritizes paying off debts with the smallest balances first, regardless of interest rate. The debt avalanche method focuses on repaying debts with the highest interest rates first to minimize overall interest paid. Comparing total interest paid under each method reveals potential savings from the debt avalanche approach. Choosing the debt avalanche method can lead to significant long-term financial benefits through reduced interest expenses. The debt snowball method can be particularly effective for individuals needing quick motivational wins. This approach is well suited for those with several very small debts. The debt snowball prioritizes paying off the smallest debts first, regardless of interest rate. Early successes in eliminating debts can provide a psychological boost, encouraging continued progress. The primary advantage of the debt snowball is its motivational impact rather than its mathematical efficiency. The debt avalanche method is preferable when managing debts with significantly different interest rates. This strategy is most effective when dealing with large debts, maximizing savings on interest payments. The debt avalanche method requires a high degree of discipline to consistently prioritize debts. Individuals with high financial discipline are more likely to succeed using the debt avalanche method. The debt snowball method may lead to higher overall interest payments compared to alternative strategies. Prioritizing smaller debts first in the debt snowball method can result in a less financially optimal outcome. The debt avalanche method focuses on minimizing total interest paid, which may be more suitable for some individuals. Choosing between debt repayment strategies depends on individual financial goals and priorities. The debt avalanche method demands consistent discipline and patience. Initial progress in the debt avalanche method may be slow. High-interest debts, if large, can hinder early momentum in the debt avalanche approach. The debt avalanche method prioritizes debts with the highest interest rates. Patience is crucial as the benefits of the debt avalanche strategy compound over time. A hybrid approach combines elements from different strategies to address individual needs and preferences. This combined strategy allows for customization, tailoring the approach to specific financial situations. One example is prioritizing a small high-interest debt for a quick win, enhancing motivation. Combining strategies can provide both psychological and financial benefits. Budgeting is essential for effective debt repayment strategies. A well-defined budget facilitates tracking of income, expenses, and debt payments. Consistent budgeting enhances adherence to chosen debt repayment methods. Effective budgeting involves detailed categorization of income streams. Expense tracking within a budget provides insights into spending habits. Debt payment schedules are integrated into the budget to ensure timely repayment. Negotiating lower interest rates can significantly enhance debt repayment strategies. Lower interest rates reduce the total amount paid over the life of a debt. Creditors may be willing to negotiate interest rates to avoid potential losses from defaults. Highlighting a strong repayment history can increase the likelihood of a successful negotiation. Researching prevailing interest rates provide leverage during negotiation. Combining lower interest rates with the debt snowball or debt avalanche methods accelerates debt freedom. The debt snowball method prioritizes paying off the smallest debts first, providing quick psychological wins. The debt avalanche method focuses on debts with the highest interest rates, minimizing overall interest paid. Debt snowball offers motivational benefits through rapid debt reduction. Debt avalanche provides financial advantages by reducing long-term interest expenses. Choosing the right debt repayment method depends on individual financial circumstances and psychological preferences. Please subscribe to the channel and hit the notification bell so that you will be updated for more videos.